Mark, how you doing, sir?
Excellent. It's been a great week. I've sort of come down now from the post Tesla Battery Day celebrations from the all the nickel players were doing after the presentation.
So, were you honking in the car park?
If I could have traveled to the United States and I could have got a lottery ticket, then I would have liked to have been there in person. But me, like most of the other nickel geeks in the world, were glued to our computer screens watching it live.
Yeah.
The one thing about it is they had the Tesla AGM part up front. Yeah. Even if you're the coolest car company in the world, your AGM, just like everyone else's corporate AGMs, is horrifically boring. So yeah, I had to sit through that for 30 minutes till Battery Day started. So
right,
yeah.
So for people who don't know, but Tesla had their AGM and Battery Day on the same day, and because they couldn't get everyone into a conference center, they were in a car park with a big screen. People drove in like one of those drive-in movie type things, right?
Oh, it's exactly like a drive-in movie, yeah.
Right.
Yeah.
Do you think anyone got in there who wasn't driving a Tesla?
No, I think they actually, I don't know if they drove in their own cars or whether they had cars pre-parked that you got to sit inside.
That's not as good. So, that's just like a glorified chair. No, they should have been made to own a Tesla to apply for the golden ticket. Anyway, so that did happen. But why don't we're here for our weekly catch up. Can't believe it. There's weeks and weeks of this good stuff. People are crying out for this. The general public want to see you, but they can't. You're safely hidden behind the walls of the club, the ever-growing club.
There we are.
So you're ours, Mark. Let's talk about the world of nickel this week. Yep. So why don't you give us a sort of roundup? What's happening in Asia?
Yep. So nickel prices came off with the rest of the commodity prices. It was a risk-off week broadly in the market. So talk about the momentum part of the market, and this week people and markets in general realize that there is still a pandemic raging in most of the world's global economy. So even though things are great in China, there is some sort of overall risk to the market so perhaps we can, take some profit. And so, nickel prices backed off, about 3-4% over the past week. So not surprising on that front. What is interesting right now in terms of the dynamics in Asia is, I think we won't see it sort of pushing us towards a consolidation in the nickel prices. So what happens is we've got ore prices rising from the bottom. So, Metal Bulletin said that the 1.5% nickel grade was at the highest it's been since 2016 in 4 years. So in terms of this Philippine ore tightness that we've been talking about for several weeks, that is coming into the market now as people realize, that they aren't going to be shipping nearly as much here in a few weeks. And the 1.8% ore price, which is the high grade price, it's at the highest that Metal Bulletin has had since 2014. So that ore tightness is, that we're expecting is really coming through the market. But on the top side is we're seeing stainless prices level out. So, what's going to happen here is you're going to see, I think, stainless steel production start to come down because, again, they have to buy the ore to make the stainless steel, and if they can't sell it, so that the tail end of the market in China, will start to turn down their stainless steel production, which again has been, going at 15 to 20% year over year, which is fantastic. So, again, in terms of overall demand, not necessarily a bad thing, but it'll mean prices are range bound here for a bit. And again, I wouldn't expect to see nickel prices start to move higher again until we see stainless prices move higher, because that'll allow the whole market to move higher from here.
So let's talk about things we understand a little bit more about, and that is Tesla. Great conversation. You gave us a bit of a summary there, but there's I think some winners, some losers, some revelations about how they're going to dramatically reduce costs of their own products and indeed processing. Fantastic. So give us your highlights. What
yeah. Oh no. It was massively bullish in terms of EVs in general, and I would say massively bullish for nickel. And I think sort of reinforced a lot of this sort of similar themes and messages that we've talked about, over the last several months here. So, first off, just in terms of, again, Tesla's, broad goal is to, help decarbonize the global economy. And so they think getting electrifying the transportation sector is a key part of it. So, what's amazing is, in terms of their goal around battery production, because they're going to bring it in-house, a portion of it in-house, not all of it, is a 30x increase between now and 2030. Again, I've alluded to in the past about sort of some of the internal forecasts from different EV parts of the EV supply chain that I've had access to, and in terms of what their internal growth forecasts are, those are kind of the scale of the numbers that they're talking about. And the reason they are getting into battery manufacturing is, again, the key barrier in their mind in terms of EV adoption is they need to get the car to a price point in the US market of $25,000 US, because at that point, the Honda Civic, Toyota Corolla, it's at that kind of entry level car that they believe they need to be able to deliver to. And so, they saw they had a chart showing sort of the cost per kilowatt hour flattening. So they're doing a whole bunch of battery breakthroughs to bring that cost down, not only of making the battery, but building the plant that makes the battery, bringing that down, very, very dramatically going forward. So, the good thing in terms of nickel was, one, their chief battery designer who shared the stage with Elon, and I thought was, quite eloquent, not like me. But yeah, basically talked about, the fact that, increasing nickel, his quote was, something to the effect of increasing nickel is the goal of every battery maker in the industry. So again, making it very clear, I've talked about before, is, nickel is the thing that gives the cars the energy density. It's also the thing that makes the cars explode. That's why we're not at 100% nickel batteries right now. And they actually did a good job explaining why that happens and why they need to have some other materials in there. And the other quote, that came off the stage was, we don't want to be constrained by nickel availability. Again, there's a lot of analysts forecasts that have some crazy demand numbers that aren't anywhere close to what, their biggest concern is. Tesla's growth is going to be constrained by battery availability, which is constrained by nickel availability. Like, that's, they didn't put that up in bright lights, but if you watch it and listen to the comments, that's this, the sum of those parts.
No, I heard that, and that's true of a number of commodities. And so I want to talk very quickly about lithium, because I want to see if there's any parallels or things we can learn about how they're going to treat nickel. Okay, so they made a big announcement around, they have secured 10,000, was it hectares or acres in Nevada. They've secured lithium clays, basically, and it's probably the least understood of all the lithiums, between hard rock and brines, and lithium clays, least understood. You've got people like Ganfeng, working on solutions to try and extract in the most efficient way lithium from lithium clays. Tesla say, we've cracked it. We add salt, water, extract the salt with the lithium, and then we remediate the land back to the way it was. It's as easy as that. And I suspect it's not as easy as that, but it's a nice way to describe it. So they are going direct to source and saying, we're not going to, well, I know they did a deal with Piedmont around spodumene, but they're not going to necessarily rely entirely on offtake. They think lithium is prevalent. There's a lot of it, and they can do a better job. And if they build their factory near to that source, that will create a huge amount of efficiencies. That seemed to be what they were saying. Is that fair?
Yeah, no. I think again, my views on lithium are it is a huge. There's huge resources available everywhere. So that's number one. Number two is it's relatively low capital intensity to build it. So that's why they're comfortable going all the way down into the chain to do it themselves, because they're not going to spend a huge amount of money per ton of lithium to build the production capacity. And again, they think they've come up with a novel processing approach that works. Again, novel processing approaches have always been a little problematic in the resources space. But again, it'll be interesting to see sort of how that ramps up. And given their success engineering wise, they've made it very clear they want to engineer and innovate. We'll see how that works, but. I'm confident that they'll probably end up getting there in the end. But again, from in terms of winners and losers, I think lithium is a loser here. If you own a other non-Nevada lithium clay project, or going to own lithium deposits that aren't close to manufacturing, then I think you're going to be a little bit behind here.
We interviewed a couple recently. I expect this might change their story dramatically, but c'est la vie. We want to see what the parallels are there. Okay, so that's the route they've taken on lithium. Mm-hmm. Nickel is not entirely similar in terms of, it's not as prevalent and there aren't that many big, large-scale resources out there. So what do you expect? How do you expect them to come at nickel? And I'm saying this in the context of a story which I kind of, had a little bit of rant about last week, which was, Giga Metals were inferring that Tesla was going to step in there and pick up all of their nickel, or at least invest heavily in them. And I don't want you to comment on Giga Metals, but how do you think Tesla will come at sourcing their nickel?
Yeah, so it was clear. So, one of the good charts that was in their pre-presentation was, there was another big theme was localizing production, because again, their driver is minimizing and I've said this before, is they want to minimize the overall cost of the value chain from end to end. So one of the ways you do it is to have supply as close to home as possible. So, what I think they're, going to do, with, again, nickel in Canada was a winner. They had a dot on their map showing that that's where they're going to source nickel for their Nevada battery production. I was joking with one of my former colleagues whether that dot was closer to where we are in Timmins or was closer to where they are in Amos. But it was in Eastern Canada, not BC. But again, it was just, they were putting something somewhere on a map. But I think, for the big difference between lithium and nickel is really around this capital intensity. So, I think, their first stage will be offtake. And again, what you've seen Tesla actually do is in cobalt, again, they're phasing cobalt out. They made it clear, we're getting rid of their cobalt out of their sort of each of their battery formulations. But they signed offtake agreements with various cobalt producers. They signed an offtake with Piedmont on the east coast of the U.S. for spodumene for lithium, but it was offtake. So I think in nickel, to me, it's going to be kind of three layers. One is this offtake financing. If they can't get everything they need by providing offtakes to people, then they'll go to provide some incentive capital. So I'm not going to write a big check. I'm going to hopefully write a little check that then helps you go get a big check alongside it to provide us the nickel we need. And if that doesn't work, then they'll look at deploying more capital directly into the space to be able, to be able to do it. So, to me, that's sort of how I would see things unfolding in the nickel space in the next kind of 3, 5, 7 years here.
I was kind of fascinated by, there's a bit of the presentation by them which talks about the speed, the consistent speed at which things move throughout the factory. And, they were being enhanced as they moved along. And they really are looking to shave costs and increase efficiencies. And they talked about, if we can be, two times, if things can move twice as quickly, we can have the output of 2 factories or a factory which is half the size. And, that level of engineering, which is not being seen in mining or processing of commodities, for a long time, because it's a very sort of industrial process, a very heavy process, and it's not necessarily about what these guys are coming at it from a slightly different way. Or do you think that these guys can help the industry? So if I'm looking at if they do solve the lithium clay problem, where Ganfeng perhaps have been trying for a long time, do you think they can step into nickel and say, look, it doesn't need to work like this, guys?
Well, they already, what was nice in their presentation, and again, it echoed something that I've talked about before, is this sort of standalone production of nickel sulfate as a way to get nickel into the EV battery is stupid. They joked about how it travels around the world and goes up and down and around. And again, highlighting all of, the issues there in terms of fundamentally, they want to get a nickel atom into a battery, and in a way that makes the nickel atom behave properly with the rest of the metal atoms that it's going to share some space with in that battery can. So I was very pleasantly, was not surprised at all when they said, no, you know what, we're going to get rid of sulfate in our production of our batteries. We're going to use nickel powder directly rather than having somebody dissolve it, having someone and then precipitate it, redissolve it again, in a plant somewhere else. No, we're just going to take nickel powder directly from the manufacturers and use that to make the precursors that go into our batteries. Now, that for some people, like this week, Terra Firma made an announcement that their sulfate production is going to be very low carbon. And again, good to see that it was that plan is ramping up. They've done a great job turning that operation around over the last 3 years. Great job that they're focusing on the low carbon aspect of it. And for them, it's the right thing because, again, they have it in solution. They can precipitate it out a bunch of different ways. And so precipitating it out as nickel sulfate is perfect. It avoids having to pay the smelter refinery sort of their cut of what's there. But for other people who are building sort of standalone sulfate plants, that's I think Tesla today made it very clear that that's not the direction the industry is going. Now, all these sulfate, we're going to everyone else who makes batteries still use sulfate, so it's not going away anytime soon. But I think Tesla made a very clear path that this is where the market is headed going forward, which makes a huge amount of sense to me, and I was glad to see it show up in the presentation.
I suspect they were listening to one of our shows. I suspect that was it.
Yes. Yeah, I think that's probably where they got it.
Yeah, they heard it here first, folks.
Not so. I don't think so.
No, I suspect it's been in the works, but it's good that they have made that a bit more public and a bit more front of house in terms of what the industry needs to start thinking about doing, be more efficient, because I think there's a lot of we've always done it this way mentality in this game. Not with you. Let's talk about some of the battery designs, because again, people have been writing in, there's less nickel in batteries. What's nickel going to do? Well, it's not quite what was said. So let's explain the different types of batteries again for people and say there's more than enough demand for nickel. It's going to be fine, but they have some different options, as I think you've said for the past several weeks. Different battery designs will be out there for different purposes. Yeah,
again, just I have said this several times. In the car market, there isn't just one engine type. They have different types of engines for different types of applications and different price points. So again, was very, very happy to see them very clearly delineate their strategy in terms of, we have a low end market, that lithium iron phosphate and the range that you can get from lithium iron phosphate makes a lot of sense. Again, because they're very focused on getting cars at a price point to help make this overall carbon-free economy shift. They had their mid-range, and what was interesting there is, today they've used a 90%. It's become a 90% plus nickel battery with even less cobalt. They've made it very clear now we're going to zero cobalt. They called it it's a nickel manganese formulation. It's about 2/3 nickel, 1/3 manganese. There's some debate whether there's still a little aluminum in there, but they didn't comment on that. And then the third one was basically high nickel batteries, and echoing their point that if you want maximum performance, maximum energy density, they want it's going to be a high nickel battery. So again, I think nickel came out a big winner in this. Again, maximizing the absolute nickel content of the battery is where, for most demanding applications, it's going to go. And I think the other part that was interesting, again, their growth is constrained by battery availability and nickel availability. They Tesla's not just thinking cars, right? They're thinking semi trucks. So if you've got a truck that's going to haul 20 tons worth of goods, those are some pretty big batteries, right, that you need to put in there. So they're building batteries for that application. They've got their Cybertruck. A pickup truck is a much bigger vehicle than a little 4-person passenger car. Again, that's a demanding application that's going to use lots of nickel. So their view is, by having this lithium iron phosphate, it frees up nickel units to be able to pursue even more aggressive growth in some of these other applications.
So manganese, the potential winner here, but not all manganese companies are born equal. So what type of manganese companies are going to do better than others?
Yeah, no, I think the thing with manganese is it's, again, very commonly used in steel making. So every ton of steel has a little bit of manganese in it, and there's obviously a lot more tons of steel produced every year than there are cars. So overall impact on the manganese market is not going to be an issue. But again, I'm assuming they didn't say specifically, but I'm assuming they would like a high purity manganese product. So again, those companies that are able to make a high purity manganese feed will most likely be the winner in this space. So
okay, and then the other one, perhaps the loser in all of this, is cobalt. It seems.
Yeah, no, I mean the cobalt shift. I mean the spike to $50 a pound really accelerated. If you look at forecasts, say 4 years ago, in terms of the evolution of batteries from 1/3 nickel, 1/3 cobalt, 1/3 manganese to being 50 to 60% nickel to being then 80 to 90% nickel, people saw that happening. We weren't going to get to the 80 to 90% batteries on a widespread basis till 2025. We're here. 50 to 60% nickel batteries are now the dominant chemistry. And over the next two or 3 years, we should see a shift towards, even 80 to 90% nickel batteries as a dominant chemistry going forward. So, no cobalts. Again, it's a lesson for any commodity that, there's a short term, metal price spikes, are great while they're happening, but, they really do damage your long-term, demand, proposition, and can have permanent effects. So, whereas, again, there's still going to be a lot of EVs made. So, cobalt demand from that sector is going to be good, but now it's going to be a fraction of what it was projected to be, say, 3, 4, 5 years ago.
So we've got cobalt losing out. We've got sulfate makers perhaps losing out. We've got lithium potentially losing out. Manganese, possibly a winner. And nickel, definitely a winner. So that's quite a nice, and that's all come from that one session from Tesla. It helps us identify certainly the route that they're taking. Do you think that's going to be reflective of the route that other automotive companies will be taking as well?
Oh, they have to be, because again, in terms of as we make this shift to the EV platform, I mean, part of the reason Elon Musk was talking about gigafactories, 7 or 8 years ago was, he realized, for Tesla to successfully compete against the major car companies, on those aspects of an EV car that are unique to the EV sector, they need to have a massive competitive advantage to be able to hold off the scale of the other car companies. Now that they do start to have some scale, and they're projecting to be even larger scale, the innovations that Tesla is now unleashing, within the battery production space, you're going to see adopted and pursued by the rest of the industry. Because again, now the other car makers who are looking to use electric batteries are going to have to keep pace with Tesla. So, I think, again, that's why, Tesla is still a small part of the car market. And EVs are still a relatively small part of the overall car market. But again, it's very clear EVs are going to be a big part of the market, and Tesla is going to be a big part of that EV market. So again, I would really encourage people, if you have any interest in batteries, they did not a bad job of explaining some of the technical challenges and some of the sort of, what a battery is all about in an EV. I would highly encourage people to skip over the AGM part, watch the battery part of it, because, they really drove home that these are, what the industry is going to need to do to get to that $25,000 car.
Yeah, I think it's fascinating. We'll put a link to it below. There's a nice summary of it. We're talking about batteries becoming structural components, not just charging and energy components. Using sort of parallels to the aeronautical industry in the early days, where they used to put the fuel containers inside the wing, but they had to fix the fuel container to the wing, etc. And then they worked out, well, actually, maybe the wing can become the fuel container for us. But we'll put that link down below. I mean, so I just thought one of the other losers here is possibly graphite, because they talked about the use of silicon as a replacement.
Yeah. So the issue, silicon has always sort of been a better element there. But the problem is it sort of expands quite a bit. And again, when you have a bunch of things jammed into a can that if certain things happen, they explode, having part of that thing expand by a huge amount is not helpful. So they came up with a technology basically to encapsulate the silicon in something that effectively absorbs all of that expansion, and will allow them to use basically 100% silicon, which again they made clear is that we want to use materials that are abundant and lower cost to be able to help drive down that price point. So yeah, no, I'd say graphite's definitely was a big loser coming out of the Battery Day session. Okay. Sorry for using the word loser. Sounds like I'm Trump.
Yeah. It does a bit. Like I think that's a nice. So like I say, put the link below. Watch it. I think there's a lot of learnings in there. It's interesting, so fascinating for Luddites like me in a way. Got some questions sent in by people. People talking about BHP naming nickel as one of the 3 forward-looking commodities, which is all good news. One viewer wrote in and said, well, the comment seemed to suggest that they want to partner with juniors so they don't get in at the wrong point. Is that kind of what you're hearing? I mean, it would I guess be normal practice, but have you heard anything more than that?
Oh, for sure. I mean, the majors have always used that's the way to basically start to gain exposure to certain projects. So, again, as we we'll have our resource update out here shortly, and then, a scoping study for Canada Nickel. But yeah, no, I think, you will see more BHP transactions done. They picked up the Honeymoon Well deposit, which is in their backyard. It was owned by Norilsk. Again, you don't declare a metal as one of your 3 sort of foundational pillars of growth and then not get pretty active in terms of trying to secure, exposure to all of the best projects sooner than later.
Right. And it's a follow-on question. It's actually from someone else, which is how do majors invest into juniors? Do they buy in the open market or do they do deals directly with the company? Hey, that's probably for some of our younger viewers.
Sure. Yeah. So the first, the most typical way is they would either there's an earn-in agreement where they'll say, okay, junior, you don't need to use your capital to do it. We have lots of it, so we'll come in and we'll agree to fund, the next stages of exploration and development of the feasibility study. And if we complete those milestones, we'll end up with 60% or 80% of the project. And you, junior, don't have to issue any more shares and to raise capital, and you'll end up with 20 to 40% of a project that's owned by a major. So that's kind of the earn-in option, is number 1. Number 2 would be a joint venture where, again, maybe a junior by this point in time has a market cap and some ability to raise capital for at least the early stages of the project that say, okay, we'll joint venture with you on this deposit to advance it forward. So, that's the second model. Again, that would be for a larger cap junior. And again, that's, where you have some leverage on the majors to say, okay, well, I'm not going to give you 80% just by spending some money. I want to participate in this at this point in time. So I'm not sort of stepping back and letting you drive the bus from here. And then the third one, the only time they really would pick up shares in the open market would really be around if they're looking to take out the company entirely. So, we haven't had, as I said, there's been a bunch of activity with the large scale low grade nickel sulfide projects already, but we really haven't had a massive development cycle in the base metal since 2011, 12, 13, where you did have a bunch of single asset juniors that owned larger scale copper projects all got taken out by, companies that were higher up in the food chain. So you had companies called, there was Far West that owned the Santo Domingo project, Quadra owned Sierra Gorda, Inmet owned, got taken out by First Quantum. You had the Rosemont copper deposit acquired by Hudbay. And then, so we haven't had one of those for a while, but that does, when you get into a full blown development cycle, you'll see 5 to 10 companies picked up by various people in no time flat. So, I think we're a little bit early days here, but 12 to 24 months out from now, you could start to see those kinds of transactions happening.
Fantastic. That's quite a good one. I see the CEO of Canada Nickel is buying in the open market. Does he know something that we don't? Quite like that.
Oh,
I quite like that one. Go on then. Just blink
I think
for
legally,
yes.
I'm not supposed. Yeah, that would be illegally if I've had material inside information that has not been disclosed to the market. Actually, it's a complete digression. The Kid Creek deposit, which is right near our property, drove the adoption actually of insider trading rules back in the mid '60s. So when they held on to the drill holes for about 4 or 5 months, the directors of the company loaded up on the stock, and then the SEC decided that was not a good way to conduct business going forward. So, anyways, sorry for the digression. No. I mean, at the end of the day, I'm a big believer. If you saw in my past life at RNC, I bought stock all the way along. When you sit down an investor and say, "Hey, I'd like you to buy stock today," at $1.50. I know the stock was at 25 cents. 6 months ago. And you're saying, well, trust me, I think it's a great investment from here, and I think it's going to go up 5 to 10x from here. When you actually write a sizable check, that's at the same price that you're asking investors to come into the market, that I think gives you a lot more credibility with that investor going forward. So honestly, insider buying and selling I would encourage people to watch that all day long. If you really want to understand, where the value of a company is, if the insiders are all loading up, that is a good sign. And when insiders are dumping, large portions of their holdings, generally, they're heading for the exits, and you should probably head there as well.
Yeah, that's quite topical, I think, Mark. But again, I've got to step away from that conversation before I say something I regret. Mark, thanks so much. What a fantastic week. We love Battery Day. I learned so much. Market seems to be going the way you say. It's nice to kind of get some kind of insight of what's happening in China. I think COVID's still got a role to play for the rest of this year. And appreciate your updates. Thank you so much.
No, thank you. And just a couple closing comments. I banged the drum the other time in terms of the EV companies giving the market more guidance in terms of how much more nickel. I think Tesla probably thought, hey, you know what? We told you we're going to increase our battery production by 30x. That nickel is it, and we're going to be constrained by nickel going forward. I worked with a really good IR person about 20 years ago that if you expect the average analyst to add or subtract two numbers, that's too much math. If you really want to communicate what it is, you need to give the number. So Tesla and the EV chain is listening. If you want all the nickel, you need to give people a range of numbers of nickel by 2030 that it is that you think you're going to use. And that's going to give you the best shot at getting that nickel, because the capital will come into juniors. The response post Tesla Battery Day for most, again, it was a risk off day generally in the market, but you didn't see much action on any of the nickel, junior developers on what was a tremendously bullish outlook coming from Tesla. So, not enough people did the math. So don't force them to do it. Just give us the numbers.
Give us the numbers. And that, you say that's all automotive manufacturers, I suspect, too, as well. But Mark, another great week. Fantastic. Go have yourself a fantastic weekend. I know I will be. And we'll speak to you next week.
Sounds great. Thanks, Matthew. Take care, sir.